Oh, that's real good.
Hello everyone, and welcome to our channel Penny Lesson. We talk about everything finance, from tips on making money and proper investing to news about the different economies and situations affecting the global markets. The goal of this channel is not only to teach you how to be more financially responsible but also to teach you how to be more aware of global events. So why not just sit back and relax while we tell you what's happening in the finance sphere? Be sure to subscribe to my channel and hit the notification bell to be constantly updated on my latest videos. Remember, one penny lesson a day keeps being penny less away. According to economist and financial expert Peter Schiff, who also serves as CEO and Chief Global Strategist of Euro-Pacific Capital Inc., our economy will crash because of the Feds. In this video, Peter Schiff explains why you cannot control inflation without causing the economy to crash in his own words. Because they keep causing inflation, the Fed has been conducting its monetary policy while gazing in the rearview mirror. They also take a look at the CPI and decide to keep printing money as long as it is below 2%. The issue is that they won't raise rates far enough to prevent the collapse of the economy and inflation. This will add to the economy's burden as inflation worsens. Therefore, you need to get out of all the assets that were bubbles and supported by all the cheap money. The issue is that even the rate increases they mentioned will be too tiny and too late to impact. We had 7% inflation as a result of the Fed's well-intentioned discussion of raising interest rates. Rate increases of 1% or 2% are not permitted. If you wish to slow the rate of inflation, rates must be higher than the inflation rate. Therefore, interest rates should be approximately 10%. However, we are unable even to approach 10% or even 5%. Because of all the past money printing and Fed stimulus measures, we are in so much debt. Because of the position they have created, it is hard to combat inflation, so they won't. Inflation will therefore continue to worsen even while the Fed raises interest rates, purportedly to combat it. That will result in stagflation, even while inflation will be higher than when the Fed began its tightening campaign. This will finally lead the Fed to change its mind and begin easing again. And sometime along the line, the markets will become aware of this truth. The dollar of the bottom will rather drop out of the dollar, and we will experience a currency crisis that will eventually turn into a crisis of sovereign death. Then all is over. Then we experience a true collapse because the Fed will have to permit interest rates to rise. And everything collapses considerably more spectacularly than it did in 2008. Alternatively, they could simply keep producing money, which would result in hyperinflation, which is far worse. Therefore, investors must exit these risky momentum stocks and buy value. And what we're witnessing is a significant shift away from American growth companies and toward foreign value equities. European stocks, Asia stock market, simple enterprises that generate actual profits, that now yields favorable returns. Investors are hunkered down there. This explains why some of these stocks are up 10 to 20 on the year, even in the absence of news. Even while all of the bubble stocks, including cryptocurrencies, are falling, including US tech stocks. You must invest in genuine assets. You must understand the value. You must stop using paper. And you need to get out of American paper, especially since we have the worst inflation problem and are powerless to address it because of our massive debt load, which makes it impossible to combat inflation without wrecking the entire economy. Because these artificially low interest rates are the cornerstone upon which the entire economy is built. However, tearing down that base is necessary to combat inflation. And if you do that, everything that has been created on top of it collapses. When you consider the stock market, the entire market comes to mind. A listing. I want to own my own company. I have run out of money. However, I am unable to hold momentum stocks. These high-flying businesses with no profits are not mine to possess. Additionally, I am unable to purchase cryptocurrencies with little value or income. Along with everything else, they increased. I own businesses and tangible enterprises with property, plants, and equipment because I want to own something actual. Recognize that creditors are the largest losers from inflation. Money that is due to people will be paid in depreciated currency. Thus, you do not desire to be a creditor denominated in US dollars. You need to own tangible assets, which is why I'm investing in all these foreign stock companies with huge dividend yields. I mean, some of the stocks I'm buying trade for less than 10 times earnings. Many of them offer dividend rates between 5% and 10%. I receive that money. I may use it. You can utilize that money to pay for your daily expenses if you're retired. The value of those dividends will increase when the value of the dollar declines, and the firms I own are all raising their prices at the moment. But many Americans who invest in the American stock market receive no dividends. All they have are sinking, expensive stocks, and the meager interest rates they receive are wholly insufficient if they have money invested in bonds. Inflation more than makes up for them. When interest rates are 2 or 3% and inflation is 7 or 10%, you lose ground yearly. And soon, you won't have the money to support your way of life. In particular, if you're retired. Currently, bonds provide greater risk than stocks. Bonds are where you should go when you want to play it safe. Thus, it is unfortunate. Because you are not assuming the stock market's risk, your money will be returned without fail. The individual you loan the money to has promised to repay you, and how much money you'll get back because you have a fixed interest rate. However, the issue is that anyone purchasing bonds at this time would be paying too much. The Fed is to blame for the rising costs. As a result, you are paying an absurdly high price for an asset that barely generates an income. When interest rates inevitably increase, the bond's price plummets. Inflation, however, is eroding the value of the cash bonds rather than paying you with the bonds. Bonds are incredibly dangerous. Because of central bankers, nothing is safe anymore. Therefore, you need to consider the different levels of risk. And in my opinion, investing in international stocks rather than US bonds is much less dangerous. Investing in gold and silver is much less dangerous than doing so in US dollars. Like when you look at a piece of real estate, and you're looking for the cash flow. One method to tell if a stock is a good value is to look at the income. You are examining how the rents compare to the expense of running it. If I run a company, I want to know how much profit I make. What will I receive? How much did I get back on my investment? If the business generates sufficient revenue to repurchase stock, it can also represent capital appreciation. Moreover, I will supply a portion of my revenue in the form of capital gains, allowing you to examine my earnings as well. Because most businesses don't distribute all their profits and dividends. Therefore, you continue to be eligible for a portion of the company's profits, even if they aren't distributed as dividends when you own stock. However, you must consider all of these appraisals to decide if it is a wise investment. Now, fortunately, there are many good companies throughout the world that we can own a stake in and use to protect our wealth. But when the value of the dollar declines, the cost of all of these assets will rise steadily for Americans. People must therefore move swiftly while they still have the means to purchase these stocks. The American stock market dominated the previous 10 years. Because we have hyped up momentum and technology stocks, while the rest of the world has value stocks. The U.S. stock market outpaced the rest of the world. Because of this, those stocks are being sold because the world no longer wants them. Because we were recycling our trade deficits. This is also a significant issue for the dollar. After all, at one point, foreigners purchased our bonds with the money they made from selling us goods. But after that, people began purchasing our stocks because our bonds were so expensive and the rates were so low. Our stocks are now costly, I guess. They do not need what we offer. The value of the dollar will plummet. However, we are starting to invest in these international stocks in the meantime. They're the ones who will prosper during this decade. Nothing from the previous decade will be successful in this one. It's a different setting. This is stagflation, and cryptocurrencies experience the same problem. If you invested in Bitcoin at the start of the previous decade and rode its rise for 10 years, you did well. A number of these other coins as well. Now, the rotation from fool's gold to the actual thing will take place. So it's now time to cash out on that Bitcoin you purchased earlier. Because of the rotation, everything is moving from excitement to value, from cryptocurrency to actual money to gold and silver. It's all about value, getting away from the currency, and defending yourself from an impending serious economic disaster in the United States. For many years, we have postponed the final day. As a result, the issues are considerably more significant, and we must consider them much more. The financial climate in the United States will be extremely challenging. Imagine the 1970s, but much worse. Greater inflation rates. The political picture is considerably scarier now because of our much weaker economy and the fact that we are starting from a lot weaker position. In the 1970s, socialism was not acceptable. Most Americans wouldn't support socialism in a vote. People now support socialism. Unfortunately, capitalism has never had a worse reputation than it has today. There you have it. What do you think of Schiff's takeaways about the current state of the U.S. economy? How do you think it will affect the world? Do you agree? Let me know your thoughts in the comments below. Wow, was that news? Why not ponder it? Want to know the latest? Comment if you want more articles like this. This video is just one of many videos on my channel that brings you the latest news about the world of global finance and economics. So go hit that subscribe button if you don't miss out on content like these. If you enjoyed this video, please hit the like button. Thank you for all your support, and I'll see you again next time. Remember, 1 penny lesson a day keeps being penny less away. Cheers.